Welcome. Welcome, everybody. Thank you so much for coming. I see some familiar names in here. Hey, Melissa, Nate, Portia, Tara, Terrace. Hey, Willie. I haven't talked to you in a long time. I see you, Deidre. Cousin, how are you? Um, and all the people that I haven't met before. My whole purpose tonight is to make something that seems far away and potentially impossible for some of you, very possible, very palatable and understandable. Um, we as a people consume a lot. We've been shopping at these shopping centers, these stores, most of us all our lives. And very rarely do we know anyone who actually owns a shopping center, or very rarely do we know how to purchase one or invest in one ourselves. So tonight is purely educational. I've been in this industry for a really long time. So if I begin to talk a little bit above what you understand, just stop me. And I want you to walk away and understand. Okay, so that's the purpose. I'm just going to go ahead and introduce myself for the people who may not know me. My name is Miranda Walker Dowell, and I am one of the co-founders of Genesis Development Partners. Genesis Development Partners is a company that I founded in 2021. And it was sort of my new beginning, which is why the company is called Genesis. It describes my life at the time, and it also describes endless possibility. And third, it describes what can you create with your own imagination, right? And so that's exactly what happened in Genesis. God used his authority to create the earth. And in development, you use your own words and imagination to create things that people live, shop, and enjoy. I started in real estate at the age of 19, where I purchased my first residential investment property. A lot of you may or may not know, I went to college at Clark Atlanta University, and there was just a lot of opportunity there. Some of it was just nerves of steel because I was young and didn't know any better, or maybe I did, right? But I purchased two properties, two multifamily actually. One was a duplex and one was a quadruplex. And I held the quadruplex for about 3 years, and I sold that to Morehouse. And then the other one I kept all the way up until I went on Shark Tank, and we'll talk a little bit about that too. But yeah, so I started early. Once I realized, man, there's a lot of money to be made in real estate, because I made it at a very young age and decided to study that in grad school. And after that, I came out and worked for a large firm by the name of CB Richard Ellis. It's one of the largest commercial real estate firms in the world. And I did retail tenant representation, which basically means with retailers who are interested in opening locations throughout the Southeast. I started in Atlanta and then started helping them throughout Florida, the Carolinas, all the way up to DC. So that was fun. I did that for a long time. And then I decided to start having children and wanted to switch my career up. My husband at the time had an amazing kitchen recipe, and we grew that kitchen recipe from that recipe to over $1 million a year in sales. We did some things to promote that business, like went on Shark Tank, Good Morning America. We created a product on QVC that sold out. And so it was just a really, really, really fun ride. But my dream has always been to be a real estate developer. So in 2021, when I decided to have this genesis, or really getting back to my dreams and what I dreamed of, that's when I started this company. And that entire crazy ride that I described kind of came in handy. And so it's amazing how sometimes you know, your path is already laid out, even though you don't know it, even though there's some unexpected or sad times along that path, your path is laid out. And so all you have to do is, you know, stay calm, number one, and be able to hear what the next step is, and then be obedient and follow that step. So before I get to preaching to y'all, let me get back to my topic. All right. Let me see. All right. So I'm going to take some questions from the chat. Oh, okay. So these are just people jumping in. I'm going to go ahead and share my screen. I will stop periodically and look in the chat and go through all of your questions. But in the meantime, let me get this presentation up for you guys. And tonight we are going to learn. So get in a quiet place and get ready to get this work. All right, hold on. Okay, can you guys see my screen okay? All right, here we go, guys. I already did my intro and everything. So first thing we're gonna do, guys, is we're gonna talk about the different types of real estate. I run into this a lot. A lot of my friends will say, "Oh, Miranda, can you help me with your house? With my house, can you show me this?" A lot of that I do know. But one thing that you'll find about real estate is it could be very, very specialized, right? You can't be good at every single thing. And so what I have chosen to specialize in is retail real estate. So what are the types of real estate? It basically can be broken down into two major categories. Residential, which most of you know about. You live in a house, you rent a house, you pretty much will understand and know residential real estate. Those are typically the realtors that you're that are most common, that you're most comfortable with. The other section is commercial real estate. And I got another fellow former commercial real estate professional in here, and Melissa. Hey, Melissa. So feel free to jump into the chat with any comments. But anyway, so commercial real estate is really property that is zoned for commercial purposes. And that also is broken down into different categories. So you have office buildings. These are normally places that people work with more amenities, etc. Industrial would be warehouse and factories. Also a place where people work, but a lot less amenities, more focused on storage, commerce, trucking. And then my personal favorite, which is retail. And the one thing I don't have on here is multifamily. Oh, and hotel. How could I forget? Davon would probably yank the cord if I didn't mention that. So you have multifamily and you have hotel. And I'm currently working on another multifamily project, but that's for another night. All right. Okay, so I kind of went through this. Okay, retail real estate. What is it? What's the state of that product type? Number one, it's one of the largest and most diverse categories in real estate, right? It holds about 25% of market share. So when I say that, of all of the different types of real estate, retail makes up 25% because it is everywhere, right? Over the past decade, the industry has experienced 4 to 5% annual growth, right? Which seems weird because when you drive around, you go to the mall's half empty. You're seeing a lot of empty big boxes, and a big box is something like you know, a Bed Bath and Beyond. A lot of times those, you know, 10 years ago, those centers were packed to the brim. And because of e-commerce, you're starting to see some of those, what they call category killers, no longer be able to survive. So an example of a category killer would be something like Bed Bath and Beyond, where they have a category where they only sell in that category. Well, now people are buying a lot of that category on Amazon. and it no longer makes sense for people to physically go into the store. But even though you see that, you see a lot of growth in cities. Atlanta is where I live, and that's a great example of growth. We've experienced, I think the number's about 7.5% annual growth here. So that means the city literally just sprawls and spreads out. So you're seeing a lot of the major metropolitan areas spread out. And when people build new subdivisions and new areas, people want to get their coffee, go to the drugstore, wash their car. They want to do all these basic goods and services. And that is what is comprising the high growth in retail, if that makes sense. All right. Typically, retail real estate leases are a minimum of 5 years. I've noticed recently they're climbing up to 10 years. That doesn't seem like a big deal to right now, but when I explain this to you, you understand why that makes sense. Because leases, ma'am, sir, is how you're going to make your money. Okay, so let's move on. I talked about this a little bit. There are different types of shopping centers. There are malls, which we all know what those are. You are noticing now the slow, painful death of malls. Their sales per square foot are going down unless you have really sort of tourist, high draw malls. What makes a mall? Typically they're enclosed. Sometimes they're open air. But what makes it a mall is how far people will drive to get to it, right? So, I don't know about you guys, but I think my closest mall is probably 7-8 miles away. Whereas I would drive to that mall, I wouldn't necessarily drive that far to go to a grocery store, right? So a mall is categorized by the size. It usually is very large, 60 to 120 acres, 400,000 to 1 million square feet. Lifestyle center is very similar. You have what they call regional tenants, so people that you would drive further to go and see. They're usually a little bit more higher end in a lifestyle center. And then they typically are centered around food or entertainment. So these type of centers, you would see like a movie theater and cool places to eat, and then you would shop there. So that's a lifestyle center. Power center is what I talked about before. It's where you have big box retailers such as, Borders, Bed Bath & Beyond, Babies R Us. We used to see Barnes & Noble. A lot of those are closing these days. That's a power center. Again, it's categorized by size and how far people drive to get to it. And then my favorite, like this is where I live, is neighborhood centers. This is what's in your neighborhood. It's 2 to 3 miles away. Typically, if y'all are like, unorganized like me, I'm going there like at least several times a week. Like I don't do a good job of like planning my shopping trips. So I'm in my Publix several times a week, right? But this is kind of, the place where you spend a lot of money and historically have not had the opportunity to make money in this type of center. But all of that changes today. All right. All right. So then the next thing you have is convenience oriented centers, which is I will also do these type of deals. I'm actually doing a few of these with a client. These are what you call non-anchored centers. So it's, a 7 to 12,000 square foot strip. I have one that I'm going to show you guys today that's being worked on. That's one of my deals. The 7 to 12,000 square foot strip will usually not have a grocery store, won't have a big anchor. Probably the biggest anchor in there would be like a drugstore or Starbucks. I love both the neighborhood and convenience centers because I feel that they're smaller in scale. They typically are occupied. These type of centers usually don't see a whole lot of vacancy, right? If you think about the you know, the local drugstore or where the Starbucks is, it's usually pretty full and it's usually pretty busy. One thing you'll find out about retail is the larger the tenant, the less they pay. So, you know, a grocery store may pay something like $8 to $10 a square foot, and then a small retailer could pay more like $30, $40 a square foot. In the center, I'm going to show you guys today, my highest paying tenant, proposed tenant there is $70 a square foot. So I'll walk you guys through that and what those numbers look like. Another thing I like about them is you can pass on the operating cost. So when you go there, the cost to strip the parking, to keep it lit up, to keep it the snow off the sidewalk, all of that you pass on to the tenant. So the tenant will pay what they call a base rent, and then they will pay what are called pass-through charges. So they will pay those additional charges back to you. And you guys stop me if I'm getting too detailed and you're like, what is she talking about? Drop it in the chat and we'll go a little bit more high level. But right now, I'm going to just dump a bunch of information to you. And then tomorrow we'll start breaking it down more how it relates to you. But tonight, we're going to do like a high level overview. I want you to get off this phone and know what you're talking about in case you want to pursue one of these opportunities. I want you to be able to speak the language and be able to move things forward. Okay, so what I also like about neighborhood and convenience-oriented centers, your tenants usually have long-term leases. As I said before, you have a 5-year deal or a 10-year deal typically. So you will usually lock that tenant in for that amount of time. And most retail tenants don't want to be in there 1 or 2 years because they're going to invest the time, energy, and money in building out their space, you know, customizing it to their clients. And they're going to spend time marketing to draw customers into their store. So a lot of times they don't want to do that and then just pick up and leave, right? I also like this category because it's less vulnerable to economic downturns. I mean, even in COVID, people were still going to go get their coffee. People were still getting their oil change. People were still, you know, doing these basic goods and services. And so you're kind of isolated from there being some major economic downturn that's going to hurt your center. And they're a lot less impacted by e-commerce. They typically will offer goods and services that cannot be easily purchased online. They're very service oriented. So, you know, I can buy my car wash online. Sometimes if I, you know, convenience oriented, like I gotta run in CVS or Walgreens real quick and pick this up, or I want to run into the beauty supply because I don't want to wait 2 days to get, you know, what I need, right? Oh, hey, Deirdre, I'll answer your question in just a second. And these centers usually are really diverse, right? So they'll include things like grocery stores, pharmacies, medical offices, and all of these things are like essential services to the community. So what I also love about this is, you know, people are excited to get these types of services in their community. For me, I was driving a long distance to get to the grocery store, and I'm telling you, when they got ready to open a Publix like 2 miles away from me, I was like sitting in the parking lot ready. And so when you open these type of centers or purchase these type of centers, that is good for your tenants, but also very good for you in getting permitting and getting it through the city because you're working with city council, planning departments who have constituents. And a lot of times those constituents will be for their own convenience, even though they're against development overall. And I'll tell you guys a story about this project in Rhode Island and what I just encountered. All right, so real quick, I'm gonna check this chat. All right, Deirdre says, as the owner, if there's a build out, does the tenant use their own GC or do you get the GC? You know what I also love about real estate, Deirdre, is that everything is negotiable, right? A typical deal, the tenant will use their own GC because a lot of times they'll have multiple stores and they want to get economies of scale and be able to, you know what I'm saying, get it exactly how they want it. And then they would negotiate with the landlord to get something that is called tenant improvement dollars or TI, right? We have a deal like that, the one that I was explaining to you guys in this 12,000 square foot strip center that I'm doing. My tenant is willing to pay me $70 per square foot, but they are also asking me for $1 million in TI. So, and maybe on the next call, we'll run the numbers and I'll show you guys why it would be worth it. But yes, all of that is negotiable. Okay, so next slide. Okay, y'all, I'm gonna apologize for this in advance because this is like really detailed and really nerdy. So if I lose you in this, just stop me. But this essentially is my business model, right? I went in and drew all these little icons because I was trying to take it out of my head and put it on paper for myself and my investors. Essentially, I focus more on, I know, Raina. Okay, I like that. Okay, so Raina, y'all, Raina is supporting me and saying she likes nerdy. Okay, so look, this is my process. I will identify the site, right? And the way that I do that, remember I was telling you guys that I work with a lot of retailers in the beginning of my career at CB Richard Ellis. I started working at CB Richard Ellis not long after I purchased my first residential property at the age of 22, right? So at 22, I was working in the business, and if you can imagine, there were a lot of other people that came in about the same age, about the same time, right? And these are my peers. As time has gone on, we have all progressed. And some of those people who I came in with that we helped each other and tried to grow together are now the heads of real estate for some of these big corporations. Does that make sense? And so everything is about relationships. Everything is about people feeling comfortable with who they're comfortable with. And so sometimes I will go to some of these relationships and just say, where are y'all trying to go? And they'll say, oh, yeah, we're interested in a site at this corner or in this trade area or over here. This is what we're looking to do. Okay. So I will identify a site that way. Once I understand this is a really good site, and tomorrow we're going to talk about fundamentals, because I'm telling you, people will come to me and say, oh, I want to put a grocery store here, without understanding the fundamentals of what a grocery store would like. And it's not a good scene because you would have put something under contract that is clearly a residential site or clearly an industrial site. So tomorrow we'll talk about what is a retail site? What makes a good retail site? And Melissa, if you come back tomorrow, I'm gonna just drag you in and help me with that piece because it is very, very important when you are out scouting. You don't always have to go in with the relationship first. Sometimes you can drive by a site and it's just really obvious that there's something that needs to be there. A lot of times it starts in markets that you're familiar with. Like you live there, like how I was telling y'all, dang, I'm driving so far to get to a grocery store. I wish I had a grocery store. Well, I start looking around and I can say, okay, how many neighbors do I have? I bet you they want a grocery store too, right? Or I'm tired of driving, 4 miles down the road. If I want to get some Starbucks, man, it would be nice if we had a Starbucks in this neighborhood. There are websites that you can go to pull demographics, and we'll talk about that and understand if there are enough people in that market to support whatever it is you're thinking would go there. You could then go to my next step, which is gain site control. So I'm in my neighborhood. I realize, hey, there's a center on the west side that's got an Aspen Dental, it's got a Chipotle in it, it's got a whatever, whatever, whatever. And we don't have one like that on this side. I'm curious if they would want to come here. The first thing that you will want to do is get control over that site. So the site that we're going to go over tonight, I actually did that. I found the site, had some interest, and then I went to go get control over it. What that means is I put it under contract. So if anybody's bought a house before, you guys know that you'll put the house under contract while you go and secure your financing or get inspections or that whole process. It usually takes about 30 days. You have the same thing with commercial, except you get a lot more time. Yes, there is earnest money, Belinda. Yes. So in the case of the site I'm going to show you guys, I put up $50,000 in earnest money. And that $50,000 in earnest money and some favor from God bought me about 15 months to try to get my life together. And so you can do that with a commercial property. Normally you don't get that much time. But that particular owner, I don't know, he just had favor with me. I was really honest with him and was like, this is the first deal I'm doing on my own. And, this is my story. But I can guarantee you, I am going to get this deal put together. And I communicated with him with every turn, and he became invested in what I was doing. And he gave me a lot of time. That's not going to always be the case, but you'll never know if you don't show up and try. Y'all know what I'm saying? So anyway, when you put the property under control, that gives you time to do these things. Now, you're going to be spending money while you're doing this, so you got to have some stone cold faith, because if the deal doesn't go through, you lose your soft costs. You can get your earnest money back, but what you spend on drawings and all that kind of stuff, gone. Okay. So you got to have a lot of faith, and you got to know what you're doing. And in some cases you may want to partner, and we'll talk a little bit about that in a moment, because that's exactly what I did. I just partnered with people to make it easier. All right. So once I had the property under control, and Ronnie, you and I have talked about this, you then will go through the process of getting your approval package together. So you'll put together a site plan, you'll talk to tenants, you will call Starbucks, you'll get a local broker like how I was, and because those people are connected as much as they're connected, and everything is about relationships in this type of business. So it doesn't mean if you've never done it before, you just out. You just get the people with the relationships and bring them in. And I will show you how to find them. Not tonight, because we don't have enough time, but those will be some of the things that I can show you. Hey, if I've never touched real estate before and I want to kind of figure out this process, who do you need on your team and how do you find them? I will help you with that. Okay. So once you have that, you put together your site plan, you talk to your tenants, you start to bring the idea to life. Now, once I have my site plan and I have my tenants who have interest, I have to have that to submit to them, and then they go through what I call corporate approval. So in the case of the deal we'll look at tonight, it was McDonald's. And I knew McDonald's wanted to be there. Why? Because my broker told me they wanted to be there. And so we put together a package for them. We had to make sure, we could do a McDonald's there. What is it zoned? Are there any overlays? Are there any moratoriums? Is there any reason why we could not do a McDonald's there? We found a lot of things we had to overcome, a lot of obstacles, but essentially at this point, we were very sure that we could do a McDonald's. So we put together the package, worked with their company, and they did an approval. So, if it's a person can say, hey, I like that site. But with a corporation like that, with shareholders, Fortune 500, they have to go through a full corporate approval or a process. Usually it entails like a committee or a group of people who will approve the site. And I sit and wait anxiously to get that approval. Once you have gotten that approval, you just make money, even if it's just on paper, right? Because, for example, if I have a piece of property, it's worth one thing, right? But a piece of property with a 20-year McDonald's ground lease is worth that much more, just the paperwork. I could flip out of that deal at that point and go on with my life, or I can with it and make the big bucks, like whatever, right? So you're also taking more risk, but you have choices at that point. You want to create the value by getting that lease signed. Now, once you have that lease signed, once you can put that tenant there, it is at that point that it's okay for your earnest money to go hard, because you're not going to lose no money, because I just said you created value. You could flip out of the deal and bring in a more experienced developer and let them take it from there, or you can stick in the deal, go raise the capital and do it yourself. I chose B. So I went and raised the money. I raised $3.5 million to purchase the land and have enough money left to do some of the site work. And I'm just gonna walk you through that in just a moment. Okay. All right, we'll go over this tomorrow because it's just more nerd stuff. So we'll go over this tomorrow because it's just too much to process right now. Let's get to the deal. That's why y'all in here. Y'all what this girl doing? I want to know what she doing, how she did it, and how can I do it? So let's just get to the nitty gritty. This project is in North Kingstown, Rhode Island. Why? Had I ever been to Kingstown, Rhode Island before doing this deal? I had not. It was just all about the relationship and where the person was that I had a good relationship with. And then it comes down to real estate fundamentals. Okay. So let me tell you guys what some of those fundamentals are and how that fits this site. So the 1.4 acres is the corner where I'm doing this 12,000 square foot strip. But I actually own the whole 3.5 acres from here to this Dunkin'. I don't own the Dunkin', but I own from here to the Dunkin'. We closed on this property about 13 months ago. So I want you guys to have an understanding of how long these deals take and the diligence and persistence that you have to get them done, but they are worth it. Okay. And this is a lot of times why you have a partner, or even why you do other things while you're putting these deals together. So myself, I consult with other developers. I've got 2 other developer clients that I come in and do the work of this process and continue to hone in on my craft. This is I'm a professional, right? Even though I've been doing this since 21, the development piece, it goes back to that concept. Anything that you want to do really, really well, you just have to put the time and energy into it. So I decided to consult other developers so I can spend more time problem solving, more time being better at what I do. All right. So also because the deals take time, you want to have other income coming in while you are growing your portfolio. I don't know how I got sidebar on that, but anyway, so back to the deal. We own from this piece all the way to this line, and the Dunkin' is right here. Why this site? I was driving down Route 1, right? And I'm looking at, man, Route 1, and I wish I had another aerial that shows you how this connects North Kingstown with another area called Wickford. And you could take this all the way out to Tiverton, which takes you to the beach, right? So I was like, man, there's a lot of people traveling up and down this Route 1 to get to different areas of Rhode Island. That means that there are a lot of cars on this road, also called traffic counts. Okay, so one of the first things you look at are traffic counts. This seems like just as good of a site, but guess what? Over here, there's not enough traffic counts. There's not enough cars just driving by, right? So that's number one, traffic counts. Number two, you see this signalized intersection. There is a stoplight here, so that means no matter what direction I'm coming from, I can easily get into this property. Man, I'm driving down the street. I don't even really eat McDonald's, but I'm hot, so I'm gonna turn in here and get me some tea. And if it were on the other side of the road and I had to figure out how to make a left turn or make a U-turn and come back, I probably just wouldn't do it. And McDonald's wouldn't sell as many teas. Does that make sense? So you focus on these very significant fundamentals. And a lot of it, like being 100% real with you guys, is just common sense. But you just need to look at it from the retailer's perspective. But I'm gonna lay it out for y'all. This is what you call access. How good is the access? How easily can I see the property from the road? How many people are going to see the property from a road on a daily basis? And then, how hard is it to actually get in? Now, this is perfect. Why? Because I can access it from this street, Devil's Foot Road. I can access it from Namcook. I can also access it from Post. I can come here and say, I don't want to deal with this traffic, and turn right here and come hit it from the back area. So when we drove down this, I'm driving down this street with all my other real estate nerds in the car, my partner and another retailer. And we're like, whoa, why is this site vacant? This would make an excellent retail site. The next thing that makes this an excellent retail site, this is what you call co-tenancy, right? So you have TJ Maxx, Home Goods, Starbucks, Chipotle, Aspen Dental, Kohl's. This means when we talked about certain stores you'll drive further to get to, that means not only are the people going to be driving down this street randomly, you will have people driving from the nearby towns to go to this Kohl's. And when they come to the Kohl's, they may want to wash their car or eat some McDonald's or grab a taco. All of this is going to drive sales for the retailer. So co-tenancy, if you ever notice, I don't care what city you go to, you will see almost the exact same shopping center with the exact same tenants in it, because they're like, they all want to be together. You understand what I'm saying? And so when I'm wanting to attract national credit tenants want to be with other national credit tenants. Now, what is a national credit tenant? It is a company like a McDonald's or a Chipotle or a Starbucks. That means their credit is real good. Like, bottom line. If I'm doing a deal with McDonald's, I'm finna get my money. Y'all understand what I'm saying? It's not the same as doing a deal with someone who just opened and they got 2 stores, one bad move, and they wiped out. A McDonald's, if they didn't give me my money, that means you got a multi-billion-dollar lawsuit. And that's highly unlikely at this point because they've weathered a few storms. And if they tell me they're going to give me, in this case, $120,000 a year for the next 20 years, more than likely I'm going to get that money. What's also important is that money is now worth more money when I sell this McDonald's because everybody else knows that too. So they're willing to pay more for, let's say, a corporate McDonald's lease than for like a coffee shop. Y'all feel me? So that's what's important when you're looking at your site. You want to look at who's going to go there and how bankable is that tenant. Okay. Y'all, so this is my site plan. This is what I have committed the last 18 months of my life to. Don't judge me. This is the property that I found, me and my real estate friends, and we decided to put it under contract. We decided to go and raise $3.5 million. I raised that money with a group of about 40 Middle Eastern doctors. Sounds random, but they run their all day. They don't have time to go and find pieces of property. They don't have time to negotiate a deal with McDonald's. They don't have time to go and find all the tenants that's going to go in this 12,000 square foot strip center. But I do, and y'all can give me the money and I'll bring the time and let's all go make some money, right? So that's what happened in this particular property. So we started with this McDonald's, and then here we're going to do a car wash. And this is actually, the car wash is what I'm actually going to be offering on Vestor. And then here I have 12,000 square feet that we are going to build. Right now I'm negotiating a lease with Taco Bell. In New England, they don't have they don't have big pieces of property because it's older. So a lot of times you don't have a whole lot of like 1 acre sites. It's just, you know, you got to assemble it. It's just harder because they've been around longer. Here, that's unimaginable. In Kansas, where a lot of my crew is, that's unimaginable. But up there, it's very difficult to just find a clear piece of land that you can build on. So because of that, Taco Bell and other tenants will go on the end of a shopping center with a drive-through. You see the drive-through here? And because they can't just do a freestander like this McDonald's. Okay, so we had to get an agreement with McDonald's to allow Taco Bell to come in, because sometimes McDonald's will say, we want to be the only fast food. Again, it's all negotiable. It's all negotiable. I had to give up something for them to agree to bring this Taco Bell in, but Taco Bell, I think we negotiated their rent at about $50 per square foot. And then you can actually attach a value to the money you're collecting. So what I mean by that is McDonald's is paying $120,000 a year for 20 years. We are not building this McDonald's. I am only leasing them the land. But I do have to deliver a piece of property with sewer, with some different elements have to be done. And all of those improvements are going to cost about $1 million just to get the land ready for me to build what you see on the site plan. So When we raised the money with the doctors, we raised enough money to acquire the site and do the land improvements. And then we finance each one of these individually, except I don't have to finance the McDonald's because I'm not building their building. The McDonald's, so like if I came to you, say, Deirdre, and I was like, listen, give me $20 every single week for the next, 5 years, right? I could then take that agreement with her and someone else would say, you know what, Miranda, I want to collect the $20 from Deirdre. So I'm going to pay you a lump sum of XYZ so I can collect the $20 from her. And I could just take my money today and go on about my business. So that's how cash flows create value today. And that's essentially what I'm doing with this McDonald's. So I bought the whole property for 2.5 million, right? I went out and raised 3.5 million to purchase the property and put $1 million into the land improvements. Guess how much the McDonald's is worth? Just the McDonald's with this string of cash flows at a 4.75 cap rate. And I'm not trying to get too deep, but essentially this lease by itself is worth 2.4 million, right? So now I have paid for the whole site with this one lease. The car wash is upside and the strip center is upside. Are y'all with me? Okay, so I'm gonna pause. That was like so much information. I'm going to pause to answer any questions, and I want you guys to tell me where y'all at with understanding this deal structure. So if you have any questions, dump it in the chat. Because I'm just not really sure. Okay, cool. Deidre says she got it. Where the rest of y'all at? Y'all with me? Y'all got questions? What's upside? Yes. Hey, Joe, I didn't know you was in here. All right, so upside is basically like what you make counter to what you put in, right? So if I already paid for the whole piece of property just by doing this one lease, that means what I call my land basis is zero, right? So it would be like building this strip center on land that's free, right? So I still have to put in my construction costs. I still have to, it's gonna, I think the cost to build this strip center is about 3.5 million. My Taco Bell lease is probably worth about 1.7 of that, right? I'm super stoked. This suite right here, I'm negotiating with an urgent care company. And the urgent care company is gonna pay $70 a square foot, but they want $1 million in TI. So tomorrow, I'm gonna walk you guys through the calculation on how I figure out how much that lease is worth, but it's worth a lot. I'm creating value. Because if you go back to what we looked at, where do you create the value? It's when I add that lease, that paper. Some of you guys in here are stock traders and things like that. Paper is worth something in deals. And so the land is the land and the building is the building, but the paper on the land and the building is what we will actually be selling. And that creates the value. Let me see. Yes, yeah, Nate, it is good to get a corporate guarantee. Hey, Willie, he says, no questions, just listening. This is good. I'm very interested. I'm following all of what you're talking about. I'm glad, guys, because I don't want to just be talking a whole bunch of stuff. I want you guys to understand and learn. The only way that you learn is being exposed to things, right? Me and my cousins are reading this book. A lot of them are in here, right? And what we just talked about in our book club is that you are more than likely going to mirror the income and net worth of the people that you are around. So seriously, it is all about exposure and who you are spending your time with and what you are spending your time in. Y'all could be chilling, watching Netflix, whatever, but by actually being exposed, and a lot of y'all know me, so y'all know if I can do this, there is something that you can do. You understand what I'm saying? And that is my point of even doing this. Okay. Portia says, so the investors in this deal are only getting the car wash, so the rest is controlled by you. Yes, the rest is controlled by the original investors and myself. And I'm gonna break down like how each deal works and what the strategic plan is moving forward and how I'm bringing in this group of investors. So kind of how Portia is really pointing it out, I don't necessarily need other investors. I don't. Like this thing I'm doing with Vestor is needed. Vestor, if you guys don't know, is a Black-owned equity crowdfunding campaign platform. Like, stop me if I'm saying it wrong, Devon. But essentially, okay, we all been saying this for a very long time. Why we don't just get together and buy our own Black? Why we don't just get together and build our own stuff? We're the ones buying up everything. We're the ones who are funding the economy. Exactly. So Devon, my sis who owns 3 hotels and has raised millions of dollars, said it wasn't good enough for her to just go raise the money and buy her hotels and she can go just raise her baby and have a good life because that's exactly what she could do right now. Instead, she was like, I want to change that. I want to create a platform where other people like y'all who are in here learning how to do this could come to her platform and we could all collaborate and fund deals. Sounds like a great idea. Sounds like something we've been talking about for a long time. Guess what? We're doing it. We're done talking. We're doing it. This sister has gone to the SEC, to FINRA, and all these large government entities to create a safe place. I don't think I can use the word safe. Y'all scratch that, because legally you can't say that, because that's how structured her stuff is. It's very structured. It's followed by the SEC. It's followed by FINRA. So she went through the process of hiring attorneys and creating this structure so that people like myself could come and fund deals. In my case, I kind of don't need to do it. I've been working with what they call accredited investors. And accredited investors are people who are like less protected because they have more assets. And so, and this is usually how much most deals are done, why you don't hear about it. It's the same rich people investing in the same deals and they just keep making money while the rest of us go to Taco Bell and buy tacos that they are now benefiting from. You feel me? Normally it's not open up to everyday people. It's just not. So the fact that she was willing to do that, my entire capital stack for this deal, and tomorrow we're gonna get into like real numbers. I'm gonna be like, this what this looks like, this how this lays out. You understand what I'm saying? But the majority of my deal is funded. I could go get hard money, collect this. I've already created value with the McDonald's, which is worth about 2.7 million. The Taco Bell is worth about 1.5. Once I get this urgent care deal, I think it's worth around $4 million. Like the total generated sales that will generate here is around $14 million that I will then split with my investors, right? I don't necessarily need to do a separate capital stack for the car wash, but guess what? I want to, because I want people to understand this process. And the people who invest with me will take this ride with me for real. Why? Because their money is invested and they will learn how to do this because they are invested. And I don't want to be the only one or the only 5 or the only 20 who are doing this. It would be more fun and more interesting if other people get involved. So out of my whole $6 million capital stack that I've had to go and will have to go and raise, I am allocating $300,000 specifically for Vester. Why? Because I want a low entry fee. I want it to be attainable to people. So instead of me saying you got to do a minimum of 25 grand or 50 grand or 30 grand, I want it to be 5. So that's why I'm raising such a small amount, because I don't want so many people, but I still want it to be very attainable to people who just want to participate and ride along. And when I say that, we'll be doing calls like this, where I'm like, okay, guys, look, this is where we at, right? And I'll be walking you through what we're doing along the way so y'all can take this ride. Now, the other thing that's really, really cool, and Davon can probably attest to this. Davon has, how old is the baby? I think he's 5. Davon has a 5-year-old son. Davon owns 3 hotels. How do you think it makes her baby feel growing up, walking into a hotel, knowing that his mother owns that hotel? It is the intrinsic value, right, that you can bring to the community by doing these types of things. I will feel the same way when I put my babies on a plane and fly to Rhode Island and we stroll our little black behinds in this McDonald's. What does that do? The same thing when we were on Shark Tank and QVC and we had products in the grocery store. I love walking into Walmart and saying, look, there go your daddy's face on a product that we created. What does that do for the next generation? We didn't experience that, but to be able to create that and experience that, I think is really cool, and it's worth the 300 grand, right? It's worth me being able to offer this to someone else, because I would like to put that type of energy out there. Y'all feel me? So that's kind of why I'm doing it and how it's structured. If I were to bring in this group to invest the entire capital stack, it would be a lot of money, and I just don't want to do that. I want to keep it small, and I want to keep it where people can learn and hopefully get more confidence to pay attention to what's going on in their own neighborhood and how they can have an impact and buy their own block. Are y'all with me? Okay. Tomorrow, we'll get more into the deal itself, how it's structured, how you do the numbers, how you do the calculations, what the formulas are. I mean, we just gonna go in so that after tomorrow, when you drive by stuff, you're gonna be like, oh, okay, right? You'll have a different understanding, unless from just the consumer side, but you'll begin to look at things a little bit different. We'll also get more into the actual offer and what's available. If y'all want to take this ride with me, you don't have to. Like I said, tonight, it's really about education. I want people exposed to how this stuff works. I want you to know the language, and I want you to have an awareness of what's going on around you and how you could potentially participate in something like this, whether it's with me or someone else. My real motivation is not necessarily to raise the 300 grand, because really I already have the ability to do that. It's fine. But I will continue. This is not my first webinar either. I've done other webinars with Davon even before I had an offer, just because I want to get this information to people and I want people to understand what they can do, right? But my offer on Davon's platform, and I don't think I'm supposed to say it like that, my offer on Vester is a 1.5 times multiple and a 36-month hold time. Do I think it's going to be a full 36 months? No, but I put that on there because I would rather exceed your expectations and get it done quicker. But I want you to really understand, okay, I need to have my money tied up for this amount of time. The 36 months is essentially the time for us to get the permitting, build the building, and sell. Now, when we talk about the car wash itself, like just draw an imaginary line around this. Car washes right now, you guys are starting to see these around almost every corner. You've got the automated car wash. They've usually got vacuums. If you look at them, how many employees do you see? Right? They're usually on a membership. They're usually crowded. There's usually a lot of people there. And so what's happening is it is a very low um, um, cost of goods, very high profit margins to build and operate these car washes. So with that being said, there are a lot of investors who are looking to purchase these because they print money. That's why, right? So a lot of these car washes will have a net profit of over $1 million a year. Okay. So with this particular piece of property, we're essentially buying this from the partnership. We will be using an SBA loan to purchase this from the partnership and build. Remember, I said earlier, we have a zero land basis in the project. So when I purchase this from my investors, they'll make a profit on the land. And then we will build this concept. It's called Gloss Car Wash. And we will sell it. These right now are trading for about 10 times EBITDA, which is basically profit, earned before income and taxes. I think that's the right way to say it. Joe is in here, Joe Wilson. He gonna know exactly what EBITDA is. So drop it in the chat, Joe, if you are free. Because Joe Wilson is like a financial whiz. He done retired and left the game, and he done left us all to keep fighting. But okay, Joe, if you dare tap in what EBITDA stands for. But essentially, it's the profit. So it's trading at 10 times EBITDA. So why do I want to hold for 36 months? Because I want to exit this deal at the exact right time, or we can maximize what we make on the deal. So whether it's right at CO, which is after it's been constructed and we're ready to sell it, or if we may need to operate for a few months and get a higher return, we want to have that flexibility. So what does that mean, like, for real, right? So if you invested $15,000 in the project, then you would get a return of $22,500. And more importantly, you would take this ride, right? So as an investor, a shareholder, you would become my partner and we would set up meetings. Typically we would, thank you. See, okay, cousin, come through. Thank you. So Aranda just threw it in the chat for us. Like, they be having my back. Y'all don't even understand. But anyway, so you put in 15. Thank you, Joe. Joe was like, oh, she ain't gonna catch me slipping. I appreciate that. All right, so you got the you got the 15, you're going to get a return of 22.5, and you're going to take this ride. I don't know what the math on that is. Wait, yeah, I do. 5,000 would be 7,500. So you put in 5, you get out 7,500 and take the ride with me. You may have that 75, and tomorrow I'll let Davon talk about where you may have the money now, even though you didn't know you had it. She'll kind of walk you through options. That's also what Joe used to do up in here, is help people with these self-directed funds and things like that. So yeah, so that's essentially what I'm offering people to come in and participate in this deal. My hope is that you would participate in this deal, that you would learn a lot, and then you will begin to participate in other deals, whether you are a passive investor in this, like you'll do with me, or if or you be the actual developer or sponsor. That's my hope. I would hope that this would just be an introduction to this world by rolling with somebody that you know and that you're more familiar with, and get a lot of education, a lot of understanding, and then feel more comfortable analyzing deals and investing along the way, so that you're not just going to work, making your money, and trusting someone else to invest your money properly. You instead are more educated and maybe have a portion of your retirement that you invest in something that you understand. The other thing is, real estate is a lot of fun. All the money that we raise obviously is backed by the real estate, right? So it's not like you are investing in an idea, but in this case, you already have, we already are through most of the permitting process, or what they call the entitlement process. I already own a stake in the property. And I say that because my investors also own a portion. So myself and my partner own 50% of the land, and our investors own the other 50%. So whatever it calculates to be as your percentage of that particular piece of property, you will own it. So it's not like some of these ones that you hear about, like in these here streets, where people put all their money up and now there ain't no property. Yeah. This is a little bit different because the property is already owned. And as I stated, we will just basically buy this from the partnership. We already have a purchase and sale contract in place. All the terms have been negotiated, so that gives us the liberty of putting together our P&Ls, and everything is laid out on how we're going to do it. So it's a lot less what they call speculative. And I think it's a good starting point for a starter investor. Once you look at a deal like this, it'll be a lot better for you trying to invest in other deals, because you'll have something to compare it to. Understand what I'm saying? And so when you get ready to say, hey, you know what, I'm going to take a portion of my retirement and I'm going to do some real estate investing, I want, by the time taking this ride with me, that you'll know what's a good deal, what's not. What's the best time to come in on a deal, what's not. You'll know things about how to calculate valuations, what elements you should look at in the lease. Our investor meetings will be very similar to this. I will go into very detailed information, and I want to teach you enough so that when you leave me, you feel more comfortable in this space. That is the real goal that I have for this. If it weren't, I wouldn't have already raised 90% of the money that I need. Y'all feel me? Like, my real goal is, come on, you guys. I don't want to be over here by myself. Get in the game. Okay? Yay, I made it through. That is the presentation. Do you guys have any questions? That was so much. I feel like I just crammed a lot out there, but I am now open to questions. Which y'all over there processing, huh? If you got questions, now's the time. Devon just dropped the, oh, hey, Raina. Yeah, I can drop my contact. Yeah, right. You do need that. I'm going to drop my contact information in the chat. You can reach me. It's my website. And then, so the main thing you want to do is go to the Vestor, because like I explained to you guys, everything is regulated by the SEC and FINRA. So they really like the information to flow through Vector so that everything is monitored, right? And that's to protect you. Okay. So go through Vester on the link that she put in the chat. I mean, I'm here. Most of y'all know how to reach me anyway, but I will be monitoring the questions on Vester, and they like that so that I'm not in there just promising y'all crazy stuff. The SEC and FINRA will be watching our communication. So it's best to put your questions there if it's very specific and deal related, regulated, so that we can all follow the rules, because we dealing with people's money. Everybody works hard. So let's stick to the letter, follow the rules. But if it's something, you know, hey, like Lawrence, hey, how you meet potential clients, blah, 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 that you can just shoot me an email. But if it's specific about the deal, let's all be rule followers and protect everyone by going on to Vester. If you want to invest in my deal, go to the link. I think you can use anything. You can use a credit card, this, that, whatever. If you need more specific help, like how do I do a self-directed IRA? How do I structure that? I'm gonna ask Joe to explain it. No, I'm just playing. But if you do need that, then you can just go to the Vester website and type your questions there, and Davon will reach out to you and do that in the appropriate way, because she knows all the rules and what is supposed to be done and how it's supposed to be explained. Because y'all know me, I'ma just tell y'all from the hip, and that ain't always what I'm supposed to be doing, right? Oh, she's gonna send y'all some recommendations. Okay. So I'm just gonna say y'all got my information, but flow through Vester. And let's keep it all, you know, out in the open. That way, if your question is something that someone else wants to know, it's all there. And that is how we're going to operate this here thing, because we're not doing this specifically for this deal, but we are doing this to bring awareness to this platform. Once and for all, be able to really do what we all been saying we want to do, which is work together to get somewhere. So we want to, you know, really work with Vester. We want to grow Vester. We want to tell people about it, so that when you get ready to do your deal and you need to raise $1 million, you got somewhere to go. Y'all with me? Thank you, guys. I hope you enjoyed the presentation. I appreciate everybody that I already know for jumping in, and the new people. I love you guys, and I'm super excited to work with you. Bye.